Hey everybody, welcome. Welcome to the Winner's Edge. This is episode 15, July 17th on a Friday. End of the week update and what we're looking forward to into next week. I want you to pay attention in this episode because I think that the number one most important um, skill that you can try to develop is looking for structure on price charts, on candles and stuff. And let's get to a chart here. And so this episode is going to focus on structure and what we were looking for when we took trades and on how the market moves, the market breathes. A little bit about what my reasoning is behind some of these. This particular market I've been in for over 2 months, and I took it based on VMS 2.0, which has taken, I mean, it's been a long journey for me, guys. I started trading 25 years ago and right at the turn of the century. And so I've had lots of ups and downs, and so I am gladly sharing with you what I have put together as a working strategy. I call it VMS 2.0. That stands for volume, momentum, and structure. It's actually backwards. Structure is first, then momentum, then volume. But so structure, what I'm talking about with that is what you're seeing on the chart, what these candles are representing, where they're going, what they're doing. I use a daily chart, and I've learned to use the daily chart after using 1 hour chart, 4 hour chart. I'm a swing trader, so my trades can go quite a while and sometimes not. Average is probably a week or two, somewhere in there. We are very strict on our money management and very strict on the rules being applied. So this one, this market was at 20-year highs. And if you just go back and look at it, you can see this market has been in an uptrend since April of 25, so over a year. And we did take a loss up here. We got in just a little bit. No, we actually got in perfect on that one. And it was like somebody was just sitting on the screen watching me do it and say, "Hey, just hit one tick above that guy, so we can get him out." Right before we make a huge move down. That happens sometimes. It's frustrating, but it does happen. That's market movement. I believe there is a little bit of manipulation going on, but there's nothing I can do about that. So I just try to find the patterns. And so patterns, when you see something like this is considered, this one especially, is a triple top. This is a double top where they come up, price comes up to an area and can't seem to break through it, gives rejection of that area, and that's what we're looking for. But the strength of the structure really depends on what is going on up here. It's like this one on a double top is not as strong as this one on a triple top, which is not as strong as a quadruple top. I wouldn't go much further than that because the channels are a whole another trading scenario. But anyhow, so structure, we need to have price either moving into resistance or support and then showing us rejection out of that. Now, the rejection part is something that's taken me a while to learn, but you have to have, an obvious uh, amount of rejection. One candle, even on a daily, represents four candles on a 4 hour. So if I have 4 days or 5 days on daily charts that are showing me rejection, like right here, 1, 2, 3, 4, 5 days of rejection right here. Okay. Down on a 4 hour chart, that's 20 candles that are showing rejection. That's huge. So that so the this is a triple top, what I call a triple top. Okay. Now, what I thought was wonderful about this one is that I kind of had enough of this market, and this is the swing high. So I felt that if it breaks and closes above this swing high, I want out. And then I thought, if it even comes up this far, I want out. So with a small profit, so I reset my stop loss here, and the market. I don't know if you can see it here, but the market came right up to it. Right? Look at that. Came right up to it and missed it. And so now it is heading down here. And I even made a note, if it does close engulfing bearish, that's going to be a really good sign that we might be heading down again. So we'll see. I might be a little aggressive with my profit on this, but I don't think so. This is the 38% Fibonacci retracement level. Markets come to that level all the time when they're doing retraces, especially this has been, remember, up for almost a year and a half. Okay, so the next one that we'll go over, these are live trades, guys. These are trades that I am really in. Live trades. Okay, so this guy, we took a loss right here, and this was one of those rejection things, man. I didn't really have enough rejection when I took the trade. But over here, now, look closely at it. I want to make sure you're seeing the same thing I'm seeing. So where it's circled here, you see this hammer candle right there. That is a strong rejection candle, followed by an engulfing bullish candle. When I saw that, I put in a limit order. This is on the 10th, and I had to make my adjustments and calculations for my stop loss, which is really easy. Just 1.5 times ATR, either deduct it from or add it to, and that gives me my stop loss. Everything else is based on that. So then with my profit target, I determine where my profit target should be, and then I find where I think I should be able to get in, either on a market entry or a limit order. And this one was a limit order, and we're almost on profit with that one. So, the momentum, I know I didn't really get into momentum on this one, but I think I will, because this is what I use the daily for. I use it for structure in the market, price action, engulfing candle and rejection, and momentum. So you can see that momentum here is this solid line coming across, and this is divergent momentum, which is very strong. It's a strong indicator that the market is going to go in whatever direction that is, at least for a little while. So this one, you can see we had the same thing on momentum. So we had structure, we came down to a defined area, showed lots of rejection right here. Look at all that rejection: 2, 3, 4, 5, 6, 7, at least 7 days. So that's 7 candles on a daily, 28 candles on a 4-hour. That's going to show a lot of rejection. Next one, and this is again just how markets move. You can see that this one basically is in consolidation even on a daily chart. But if you were a channel trader, then you might be able to take advantage. I mean, what do we do here? This one we got, that one we got, that one we got. These are all profitable trades that we've already taken. And now we're doing it again, but this is a pullback. So I want you to see what a pullback is. A pullback is when you have a high or a low, and it comes to an area, makes a swing low, comes back up. You only know it's a swing low when it does the second leg. Now you know that the first one is a swing low. Breaks below that swing low and then comes back up to the same area that the swing low originally was broken by this leg. Okay, so this, I call this number 4. So if you had 1, 2, 3, this is number 4. So I'll trade 4 and 6 on pullbacks. So that's the reason that we took this one. And you look down at momentum here, you see momentum is in a downtrend, and we made a hook right here. That hook is super important. Don't do anything unless you get the hook. And on structure, we also have an engulfing candle. So we have, look at the rejection here. We have 5-6 days of rejection, and then we have a solid engulfing candle that lines up perfectly with momentum that's hooking and strong volume to the downside. So that's the VMS 2.0 in a nutshell, man. And now you just have to learn. You have to learn how to identify these structures. So pullback is a big one that we use, and this is just all you got to do is watch for it. So you see that first swing low, and then at least three candles that would be bullish in this case, and then a rejection and a break and close below the original swing low to here, wherever it's going to stop, and then another three candles up, and then a rejection candle and rejection itself, not just the candle, but rejection itself. This is all showing that this market wants to go down. You have momentum to the downside and volume is strong. Next one up is euro to the Swiss franc. This is another live trade that we are in. This is a 1, 2, 3 pullback. I'm going to show it to you right here. 1, 2, 3, and here's the pullback. So now we're anticipating something like that. Okay, so you have 1, 2, 3, and it's 3 because it broke and closed above the swing high here, and then it made a pullback all the way. Now it could have been this one, but it wasn't this one. This is the stronger support level right here, and the 50 EMA is an added bonus for whatever, if you want to go when price reacts at the 50, sometimes it'll do that all by itself, and that's strong. That's a strong indicator using the 50. I hope you understand bounce. It's like this particular case, this is confluence right here, where you have the 50 coming up, price comes down, reacts off of it, comes back up, and you have a strong support scenario there. So we feel strongly this one's going to go up. And so that's structure. And now we're looking for momentum. This is all on the daily. And we have momentum here. You can see by this line. We have a hook down here. Volume is strong. There's my volume on that. And so that's how come we took this one. Now we just wait. And I have other videos on stop losses and profit targets. But for now, I'm trying to show you just a variety of structures that we have already used to get into markets that we're currently in right now. So this one I felt was a pullback. So we had a 1. There's lots of pullbacks. There's many more pullbacks than there are triple tops or reversals. So 1, 2, and then technically it's here, but this one surpassed it. So now it's here. Now it's here. Well, because when I took it, it wasn't there. So let me back up here just a second. Sorry, guys. So actually we have here, 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 and then it came back up into this area. This is kind of an odd looking one, but nothing says that, the charts have to be perfect. Now I don't know what the hell I just did. Okay. All right, now I think if I do that, nope, I want that down there. Wait a minute. Boop, there it is. Hey, look at that. You guys saw it up close and personal. All right, so, this one we've been in for over a month, and we're just going to, hold on to it, and we still think this market will be going down, and some trades are like that. Pound to the Swiss franc. This one, again, is a pullback that we got in. I'm going to go ahead and identify it for you. Honestly, it's all the way back here, and it comes up to there, to here. This is the breakout, guys, and it comes back down here. And what did I do? Well, I hate it when I do that. Hang on, because this is a really good lesson. So we got there, here, and then a breakout above the previous. There it is. Okay, and we think it's going to do that. So right here, see how it came back down to the 50 again? And so this was actually my trigger. The momentum was in an uptrend, and we're buying right at the hook, right after it makes that hook. We came in with a market order when we felt it was strong enough to do that. And so we're thinking this one's going to go up, obviously. Next one is the dollar to the yen. We just got in this one yesterday, and I'm almost kind of kicking myself. I probably should have done a limit order, but I felt like everything was good enough. And this is a 2-to-1 that we're looking for here. But why did we get into it? Structure. Here's 2-year highs. Okay, and I'm seeing this as strong rejection, and I'm also seeing momentum. I have never seen momentum like this before, so I think there's going to be a strong reaction here somewhere. And I hope my timing's not off. I've already been off twice in this market. So, and the other thing, we don't do any revenge trading or nothing like that. So we just take our structure and go with it. Okay, so here's a couple of wins that we took yesterday. This market, dollar to the Canadian dollar, ended up hitting our first target, and we saw momentum being super low here, and so we went ahead and took our profit there. And we had 2 different markets or 2 different accounts, so we got 2.5 on both of them. Yeah, but the reason that we got into this trade, this is what you want, is the reason. This is an impulsive move. Look how big that impulsive move is. Okay, I mean even at 2.5, we could have held out for 38. I was comfortable with what we took, but it'll be interesting to see if this market comes down and hits 38%. A lot of times these markets, especially when they do impulsive moves like this, they will retrace to the 38 and sometimes the 50% target levels. So ideally, what we would like to see is for the market to come all the way down there, right in between the 38 and the 50. Okay, but the reason that we took it, we have an impulsive up move, bullish move, and I mean, you can tell, right? There's no question about that. And then we have several days on the daily chart of rejection, including a shooting star candle right here. Okay, so we got in the market, and this was I don't know, 7 days. What was it? 2 weeks? Yeah, about 2 weeks. And we took profit on that one. And the last one that we are currently in live is the dollar to the Swiss franc. And this is a 1, 2, 3. I've already got it identified for you. Here is the number 6, and we don't take 8, and we certainly don't take 2. So the market needs to show us that it's in an uptrend. And this was a beautiful, I mean, look at the support right here, here, and here. You've got 3 different areas of support. Market moved out, closed out and about or above, broke out and closed. Okay. And then from here, we had 2 really nice bullish engulfing candles that corresponded with momentum in an uptrend and a hook right here. Volume was high on this one. 1 hour, I found 91 on the volume. And so that tells me that buyers are stepping in. So we will wait and watch what happens here. This, I believe, is the 38%, and I've got mine set up here at a 3-to-1. Now, the markets that we're watching going into next week, let's see, Australian dollar. Okay, Australian dollar to the Swiss franc is 1. And this one you can see is forming a triple top, actually a quad top, but I don't do that. I just call them all triple tops. And you can see momentum is hooking really nicely here. Now, what we want to watch for, because this is a triple top, we might not need to see divergence down here. So we want to pay attention to this one. That's definitely on our watch list. Australian dollar to the US dollar. Here's another one that is in a pullback. 1, 2, 3, 4, 5. So this is number 6, but it also is in confluence with the downtrend line. This is the third touch of the downtrend, and there's the 50 EMA sitting right there. So we're watching this candle really close. Pound to the Swiss franc. Nope, I already did that one. Did that one, did that one, did that one. Okay. That's all I got, and I'm just going by my notes, guys. So, I'm just a guy trying to share a strategy that's working for me. And if you have any questions or comments, please leave them and I will respond. Other than that, today's Friday, and so have a fantastic weekend. And I wish you nothing but success. This is Darrell. I'll talk to you next time.